Thank you for joining me. Today I want to go over what is the Nasdaq. So the Nasdaq is an index of mostly tech stocks, which means that there's a Visa and a MasterCard in there, but mostly it is the big names in tech companies. So you have Microsoft, Amazon, Apple, Facebook, and that already makes up over 30% of the whole index. It's the most risky of indices because there was a big tech bubble in the early 2000s, and it's just basically considered a really risky investment because of that. But considering that there was mostly fraud and overstating revenues and income and everything, and people actually went to jail for that. So I would think that the situation is much different now than it was then, and it's not all that risky anymore. So the average return of the Nasdaq is over 18%, which is straight up double what the S&P 500 does. But again, we're kind of cherry picking here because over the last 20 years, the return is nowhere near that good. So the last 10 years is very misleading, both for the S&P 500 and for the Nasdaq, because we're now in 2019, so we're starting after the big stock market crash. So return amazing, obviously, but it's a fairly risky investment. And it took the index as a whole 14 years after the bubble burst to actually reach their previous high. So that means if you bought Nasdaq at the very peak, it took 14 years to break even, which means in the same time as it would have taken you to quadruple your money in the S&P 500. So with that said, it's fairly risky because tech companies kind of tend to go quickly if they do go. Like think of MySpace when Facebook took over and companies like that. So when the previous disruptors actually get disrupted, they tend to fall down very quickly and without much warning if you're not following the whole scene very closely. So it is certainly still a fairly risky index, so I wouldn't recommend throwing all your money into the Nasdaq index. On Vanguard, it's VGT. On Fidelity, it's FTech. And definitely do put some money in there. Definitely do not put all of your money in there, but I would think that the return is pretty good and will stay pretty good over the next few years. And the risk is probably not where it was with, Microsoft, Amazon, Google, Apple. I don't see them really dropping that much quickly. So I don't think the risk is quite where it was. It certainly is more risky than the S&P 500, which is why you're getting a premium in the return. So make sure you subscribe if you want more videos like this. I'm coming out with a new video every day before market open. Have a good day.